My name is Stephan Böttger. I'm working as a director for the international transactions team at Corpus Sireo. I'm based in Luxembourg. So Corpus Sireo is a Germany and Luxembourg-based company. We are a member of Swiss Life family since 2014. So our main focus in services is fund and portfolio management. We're doing asset management, and we're doing transaction investment management for our clients. And we have one of our columns as well is the project development, what we're doing mostly in Germany at the very moment in terms of commercial and residential. So what we are up for in the Nordics is basically, so we are handling a couple of institutional funds for German institutions and some for Swiss institutions meanwhile as well. And we just launched a German Kapitalverwaltungsgesellschaft at the end of 2016. And so we are up for a open-ended public fund, which will be available as of, I think, during the year. This year you can you can buy shares at the bank's counter, and so we are at the very moment we're chasing a starting portfolio, and we are in several deals at the very moment. My colleague Martin, who is there as well, and me were doing transactions at the very moment in Budapest, in Prague, in Amsterdam. So this is already ongoing, and we are chasing the Nordics as well. So since German investors and Swiss investors, they like the Nordics, some more, some a bit more less, but still it's an interesting market for us. And so we are already invested in Sweden and in Finland as well. And we are trying to get the market entry into Norway and Denmark at the very moment.
Okay, good. So you're actually going to be making the market more competitive, Stephan, on the sounds of it.
Hopefully.
Good. Andrew.
Good morning. My name's Andrew Smith. I'm an Australian and Swedish citizen. I guess I'm a love refugee to Sweden. So I moved to Sweden 12 years ago to be with my wife, who's with an American bank there. So I've been based, of that 12 years, 8 in Stockholm and the last 4 here in London. Catella, when I joined, we were owned by Inter-IKEA. So Catella really started out as the investment arm for the money that the furniture business was making, and that's part of the DNA of Catella. So we were investing that money into equities, fixed income, and of course real estate investments. And that we are now listed and public, and the headquarters is in Sweden. And today we have a very strong hedge fund, but the real estate side of the business on the advisory side has been market leading in the Nordics for quite some time, for probably 25 years. And the sorts of things, being Australian by background, I'm very used to the listed sector there. And of course the listed sector is very strong in the Swedish market. So in the last 12 to 24 months, I think Catella, and I've worked on probably 6 IPOs of new property companies and the creation of new property companies in the Nordics. We have about 16 billion euro under management. Some of that is for separate accounts, some of it is working with people that are in the room here and managing different assets in the Nordics, but also throughout Europe. 600 people in total, platform across Europe.
Great. Pontus.
Morning everyone, my name is Pontus Sundin and I am the chief representative of Helaba in the Nordics. Helaba has been active in the Nordics since early 2000, and last year we decided to open up an office, and I got the task to open up that office. We have exposure close to 1.3 billion euros in the Nordics, and we're active in all Nordic markets. We are doing all kind of real estate lending, office, residential development, you name it. And as we can see, the market's been extremely liquid the last couple of years, and this is something that you obviously can benefit from. And also worth mentioning is that the debt side of the market in the Nordics is quite limited. There are few banks active. So as a bank, it's a very, very good market to operate in.
Okay, great. Rikke.
Good morning, everybody. My name is Lykke. I'm, as you said, Danish. I get that a lot. I don't know why. I am the head of the Nordic region for PATRIZIA Immobilien AG, a stock-listed real estate investment firm in Germany. We're listed in Frankfurt. I'm head of Nordics, which in our terms mean, because depending on which nationality we speak with, it depends on what Nordics actually mean. In this case, it's Denmark, Norway, Sweden, Finland. FYI, Iceland is actually also part of the Nordics, but I think not offending anybody, there's maybe a hotel or two worth and a shopping center worth investing in, and that's it. So we sort of exclude them for the conversation. We've been active outside. We've been active within the real estate scene now for plus 30 years within PATRIZIA. About 5-6 years ago, we decided to go outside of Germany, but with local staff, which is a little bit different than most of our colleagues in the business, because we have serious local staff sitting in the countries. We're about 35 people in the Nordics who are doing nothing but real estate investments and asset management for our different funds. We have about 19 billion euro under management at the moment in PATRIZIA. We're a very active investment and transaction firm. I think you'll notice that I think last year we transacted about 7 billion euro buying and selling. We were a net seller last year, actually. Not because we don't believe in Europe. We do very much, but the opportunity was there for our investors. I've been heading the Nordic region now for 5 years, and yes, we have most of our investments at the moment in Denmark, but that does not have anything to do with me being Danish. And that actually has to do with that's where you find the largest gap between your investment, the interest rates, and what you can buy for. Actually, you can find up to about, even on the core markets, you can find up to 2.5–3%. 300 basis points difference between actually the interest rate, all included, and what you are acquiring for in OI yield. That's the reason why we're so active in Denmark at the moment, because that's not what you will see in Sweden, Norway, and Finland. But that's also because we have a very special financing system.
Indeed.
Which is very cheap. I think one of the cheapest in Europe.
Absolutely.
So it's very interesting. Yeah.
Great, thank you. And slightly disappointing for the 20-strong team from Invest in Iceland.
I'm sorry. I'm sure they can find a good hotel or two. Tourist rates are booming in Iceland at the moment. So.
Good. Thank you for that. Good breadth of different types of activity across the Nordics. We've seen from what Tom had said that there's been sort of record investment in the last few years, and that international investors' appetite kind of continues to grow. Andrew, how do you see that in the next sort of 12 months? Do you see that continuing? Do you buy into the idea that there's no stop to this, that because of low bond yields and those kinds of things, that international investors will continue looking far more into real estate, and therefore will continue looking far more into the Nordics? What's your feel for the next 6 to 12 months?
I think it's very easy to look at the Nordics as one, but the reality is each of the countries are very different. So in my view, to answer that question, it's almost worth going around country by country. But what I would say would be the most recent example of last week. We had offers we were marketing in Denmark what I would call a value add or opportunistic portfolio, lot size of around 300 million euro, offices pan Denmark, and I would say that the number of bids that we had there was exceeding 10, but 80% of those bids were foreigners. So I think that probably gives the room a feeling for the fact that it's certainly not, despite the fact that those graphs are showing that it's very dominant with local capital, there is still a very strong interest from the private equity houses and the foreign capital in the Nordics. I would say I'd be in agreement with Rikke that Denmark is probably is somewhat easier than Sweden for the foreigners, and there's a number of reasons for that. That's mainly because Denmark versus Sweden, or Sweden has a huge listed market, so 30% or more of the capital or of all of the properties is held in listed propcos in Sweden, and Denmark only has 2 sort of listed property companies. So there's some fundamental differences. But then I would say if you look at take Finland for example, that's in my book a very interesting market to be looking at the moment, and of course we've seen a lot of the Swedish players going to Finland because they see a yield gap and an opportunity there. And we're all aware in this room of things like Nokia and the pain that Finland has had being a neighbour of Russia as well. But really, in our view, that market has bottomed out and is moving forward. So I was talking to a few of the people in the room before this event whilst we were having a coffee, and there does seem to be a general viewpoint in this room as well from some of the foreign investors to be looking at Finland. The problem is, of course, is that Finland's a very small market, so then it comes down to where the actual volumes are, and Sweden is the biggest market by far in terms of volume.
Okay, good. One of the things obviously that we've been looking at quite a lot in these is risk and how that's impacting. PATRIZIA obviously and Corpus Sireo plainly investing across Europe and outside. What's your sense of the Nordics in terms of the risk factor? Obviously you've got Brexit, you've got now the French elections, German elections coming up. Do you think that sort of stability in the Nordics is going to lead to more international interest? Is that part of the interest, Rikke?
Well, actually I thought long about this because I've had a number of discussions on this, and it's easy to say yes. I think the answer is more complicated. The answer is still a yes, we will see more. The question is why. I think after the French election, we've had the Dutch election. I think the German election is now not as scary to a lot of investors as it was before when we didn't know where the other two were going. I think there is another point that people don't really realize about the Nordics, and that is that everything, the way we set up the societies back in the 60s and 70s, everything can be calculated, everything can be measured, everything is very, very stable, very transparent. If you look at, I think, almost every top 10 you can find, from best place of doing business to most of the entrepreneurial to all these things, 3 out of 4 at least of the countries always in top 10. And I think it has to do with the way the society is set up. And that is also one of the reasons why we won't accept a tax law coming in the last second and then being maybe back-ended as well. We will always have a very transparent system where we actually get these laws and good in advance, the suggestions of the laws. We discuss them and they bring in experts, and then we can maybe change a thing or two. And there will always be clauses saying doesn't apply to this and that because of the strong lobbyism of the different industries. But I think that's one of the reasons why we're such a stable society, because everything is decided in the middle spectrum. Even though you have a right wing and a left wing, and they don't like each other publicly every day, as soon as there's something, a tax law or something they need to bring forward, they will always go into the middle and make sure that parties from each side is always involved in order to make sure that that tax law won't be, like we see with Obamacare, suddenly taken away as soon as somebody else gets into the office. So in that sense, everything becomes very stable. Education is high. I mean, you have all these things. I wish I had it with me, but it's very striking that there's so much in the Nordics. Somebody was asking me at one point, what's the mystique about the Nordics? Even if you go into fashion and design and stuff, you're always in top 10. And I do think it has something to do with the way we've set up our society. I can't explain it otherwise, because it doesn't make sense that the Nordics countries should be more in top 10 than some of the other European countries. And I think that's we also the highest taxed, yet one of the most happy people in the world. I think the Norwegians took it from the Danes at the moment. But we also have a welfare system where you don't have to worry about whether your kids get sick or not. You don't have to worry about schooling. You get paid to go to school. I have a son, he's 18, and despite my salary earnings, he actually gets 600 euros a month to study. And that's the lowest minimum you get. So all these things have an impact on a lot of things, and I think we underestimate that impact. But getting back to your question, I think the Nordics will continue to be interesting, because if you look at Germany, now they have a growth in population, but the only reason they have that is actually because of all the asylum seekers. If not, they were actually below, I think, the 1990s number. Whereas the Nordics also growing. Sweden is growing quite a lot at the moment because of the asylum seekers. But if you look at Denmark and Finland, for example, it's actually not only due to that. The population as it is today grows within itself as well. And then we have the urbanization. And then we have everything. You can track everything. I mean, we all have a number, so you can track us. I mean, in Finland, you can even go online. If you have the social security number of a person, you can actually find if somebody is seeking a job with you, you can find what they're getting in the current job as a salary. So all these things are very interesting. You can find all these things.
That's good. I've got a sudden desire to go back to school. And,
Sorry, but it's just, the answer is not just, yes, due to politics and everybody's talking about a safe haven. I think there's more to it that we don't realize. Sorry, that was a little bit philosophical, but...
No, it was a bit of a love-in for the Nordics, wasn't it? And I was going to say...
I love the Nordics, what can I say?
Pontus, in terms of your lending, obviously, Helaba, very stable German bank. You're active in the Nordics and have been growing your activities there.
Yes.
What makes it more attractive for you? And in terms of the international investors that are looking, why are they looking and what types of assets?
No, but this is it's very much as we already concluded, and obviously the Nordic markets are very attractive for international investors. And to be fair, our core clients are the international investors, because we can support all the international investors in many different jurisdictions in different countries. So obviously, when they start to look at the Nordics, we are there, we can support them and do business. I would say it's very much a derivative of what's out on the market, what international investors looks at: retail, office. And even resi, I must say. Resi in Sweden also, which might be a bit surprising given the legislation regarding the rent. It's not a free rent on the resi part. So that's typically logistics, and from my point of view, quite expensive logistics.
And so that's one of the more popular ones that you're looking at the moment in terms of the clients coming to you.
Yes.
Okay, good. You're more focused on, as Corpus Sireo, more focused on the office markets, which would tend to lead you towards Sweden. It was quite interesting in Tom's presentation there. You could see that the balance with office was slightly different to the other sectors. How are you seeing that in terms of competitiveness of the market in the Nordics versus the other markets that you're active in, and maybe particularly Germany?
Oh yeah. I would completely agree with Andrew, first of all, when it comes to, when the Nordics, you have to consider country by country, and I think they are completely different one to another. And from a German perspective, so this is just something to think about, is the Swedish economy is as big as the economy in Baden-Württemberg. So this is more or less the same GDP. So if you consider one federal state of Germany is as big, or economically wise, as big as the Swedish economy. So in terms of competition, of course, German investors would focus on the main city, which is Stockholm, which is Oslo, and which is Helsinki metropolitan area, and Copenhagen as well. And compared to German market, and this is a quite interesting fact which comes to us from time to time when we are traveling across Europe and trying to dig into new opportunities, and is like we do not have prices as we have in London, for example. And when you are in Germany, for example, in a B city, then you have the same announcement is, we do not have the price as we have in London. Yeah, that's right. I wish we would have the same price as we have in London, so we could do something in your B city. So this is quite expensive market, and this is basically quite in comparison to a Swedish market. We have the same situation what we know from home turf, basically at the very moment. It was different in the past, and which makes us, I'd say, confident in terms of competition itself. But we have other problems since we're European or Euro-based investors. So we have the currency issue. So it's a question of timing at the very moment. I would say it's a good timing for Euro investors for Sweden, and on the other hand, you have very strong local investors still. So the pension funds, I would compare them to public open-ended funds in Germany, or to pension funds in Germany. So very strong. No one is waiting for our money or for the German investors' money. This is something we have to learn, even from a German perspective. So there is a big competition, and we think we are confident to get into competition, but of course we are not as competitive in pricing as local investors, especially when it comes to Sweden. It could be.
Okay, good. And you're looking across all of the markets. You're already investing in Sweden.
Yes.
Invested in Finland. Denmark, Norway. Simply a matter of you researching the markets, getting involved in the markets. Are they attractive for you, but you just haven't actually acted there yet, or what's your view on those on the four markets?
Right. I think we are trying to entry Norway since, I don't know, 5 years for now. So it's quite tough when it comes to fund structure itself. So you have a certain cost position. Financing is not that easy in Norway as well. So this is I think the toughest market in terms of financing. And so if there would be opportunities, we have been looking into opportunities. We were bidding. We were involved in certain cases. Same in Copenhagen as well. So we were bidding in 2015, 2016. But did not end up where we would like to end up, basically, by being invested finally. Timing-wise, we have been quite early in 2013. We have been in Stockholm already. So that was still a quite good time to get into the market. And we are looking into Finland and Helsinki as well at the very moment, and we are bidding there as well. So we are in processes, we are bidding. We're trying to get into the markets, and we're traveling across the Nordics and trying to get hold of assets there. For sure.
Okay, good. Pontus, Stephan obviously mentioned there about more difficulty in terms of financing for Norway. Just in terms of, you can obviously tell us what Helaba's view is on the different markets, but what's your sense in terms of availability of finance, cost of finance across the area?
No, but it's as everybody's concluded, every country is very specific coming to the financing as well, and as Rikke pointed out, the Danish way is very peculiar with the bond, the secured bond, which makes it very competitive. Compared with our normal banks, how we operate. Sweden obviously has the 4 domestic banks, and they're extremely dominant in the market. Norway only have 1 or 2 that are called big ones, and they have smaller saving associations that also support. Norway has always been a very domestic market, both coming to the investors and to the banks. It's in the last 5 to 7 years, perhaps, since it opened up a bit, we see an international interest. The market is also relatively small, and you have some main hubs where you can find some liquidity, which makes it interesting. Sweden is obviously the most liquid market. The liquidity in Sweden is a comparison to Paris, and Paris is obviously 20 billion euros a year, roughly. France as a whole is 25 billion euros. So that's just a fine comparison. And Finland is that there you have Nordea and Pohjola and some other banks. And that's, I guess, that's both the benefit and the problem with the Nordics. There are few banks active in the market, and especially coming as an international investor into these markets, so you can actually find it tough to find financing from time to time. Coming to pricing, that's very hard to say because it's differ a lot given the asset and what kind of investors you are and the gearing and so on and so forth. And that can stretch probably from 100 basis points up to 300 basis points, given what kind of asset and then how the investing is structured.
Okay, good. And Andrew, in terms of the different markets, we've looked at that a little bit, but do you see Sweden as still kind of leading the way in a sense for the other markets, both in terms of cross-border investment into, intra-Nordic investment, but also outside and domestic capital? What's your view? Is it really Sweden leading and the others following, or how do you see the market?
If you take Denmark, the largest foreign investor into Denmark has been Swedish capital, and it's the same with Finland. And that's a function of the fact that you have these very large property companies that are backed by Swedish pension funds that have expanded outside of Sweden, but not into continental Europe as such, but just within the Nordics. And on top of that, the listed companies that, in order to grow and have found it difficult to acquire in Sweden, have found yield gap in Finland and potentially Denmark. So I think also with the big cities in Sweden, it's Stockholm, Gothenburg, and Malmö. Two of those, the Gothenburg and Malmö, are on the coast. Now that we have the bridge that's sort of crossing into Denmark, I see a lot more interest in Malmö from a perspective of it's actually not that difficult to live in Malmö and commute into Copenhagen, and that's had a huge change with respect to your question as to Swedes' view on Denmark and Danes' view on Sweden. It's sort of a lot more friendly. I know it hasn't been that way throughout time, and each have tried to kill each other, but it seems to be when we've put clubs together of investors, it's always been extremely difficult to put a Dane into a club of investors with a Swede, whereas it's been very easy to put Norwegians, Finns and Swedes together. But that seems to be changing a lot now, and I honestly think that this bridge has a lot to do with that. I've been with some of the people in this room looking at some portfolios, pan-Sweden, and going into Denmark. So a lot of people are, even though we keep saying that it's individual countries, I think in the last sort of couple of years that investors are trying to have more pan-Nordic portfolios, and that has been led by these big companies in Sweden that have just wanted to continue to acquire and push out. So yeah, definitely.
Okay, good. You wanted to pick that up, Rikke?
Yeah, I was thinking when you gave your intro about all these numbers and this cross-border versus domestic and so on. I think we have to be I'm a little bit hesitant about some of these conclusions made, because if you take until recently for the MIPIM, there was made a list, and this is just an example, about who invested the most the last 5 years in Denmark, and that happened to be PATRIZIA. Now NIAM just came and took that spot because they just made I think around about 800 million euro deal. The thing is, the money that comes from, PATRIZIA is seen as a foreigner, a European, sort of a German, when we invest. NIAM is seen as a Swede, but I think we all know that the money from NIAM is both Nordic, it's European, and it's US based. So the thing is, a lot of these very active investment managers, we have other very active investment managers, are seen as a particular country. So for example, a lot of the Swedes, we have some of the listed companies that are investing into Denmark, but NIAM is seen as a Swede in these statistics, and they're not. Yes, the management company is Swedish, but the money actually flows from other places. So that's why I'm a little bit hesitant to say it's only Nordic cross-border investments being done, because it's actually because a lot of investors are doing it through funds that happen to be located. It's a Luxembourg fund actually, but managed by a Swedish company with local presence. And another thing, I was looking at the numbers, and what would be very interesting would be to take these numbers, the very few big deals that have been done, especially in Norway, would look very different in 2015. If you take 1 or 2 huge office buildings that were sold out of the statistics, then it would look differently. I mean, the markets are fairly small, we have to acknowledge that. So one big deal can just change the view when you look at it from a statistical point of view. Another thing that is very interesting, and I don't know all the jurisdictions in the world, but the Nordic pension funds are very, very active. And what you will see in Sweden, they are not going into direct investments. They invest through some of their listed or non-listed vehicles that they have together with others. So, for example, there are a number of companies that are actually owned, backed by AP7 or AP3 or some of the others, investing actively. Whereas the Danish, the Norwegian, and in particular also the Finnish actually do direct investments in their own country. So they actually hold all these assets on their balance sheet, which is very different, because as soon as they go outside their jurisdictional the borders, they go indirect. Now they tend to go more and more direct. I know ATP from Denmark bought directly here together with somebody else in a hotel. 2 hotels actually here in London last year. They just bought something together with AXA, I think, in Holland. It's going to be one of the biggest hotels in Holland, I think. All these things. So they start to go direct, but mostly they've gone indirect. And I think these sort of differences compared to, let's say, Germany, where none of the pension funds have anything directly. They have everything is more or less indirect through KVGs. Through the funds. Very few have it directly on their own balance sheet. These things has to be taken into consideration when looking at the market, because what if a Swedish pension fund gives a German or a Danish fund some money to invest in Denmark? Would it then be considered domestic, or would it be considered a cross-border deal? The thing is, if the investment manager is Danish, then it would be considered a Danish deal. If it's German, it would be a European deal, cross-border. So these things you have to take into consideration. Doesn't take away from the fact that it is very domestic, and if you want to go, I would urge you to really find a good local partner, because it's also very relationship-driven. Real estate is relationship-driven, but in the Nordics in particular, there's a lot of, we officially call them off-market deals, but maybe, or they could also sometimes be classified as on-market deals, but they maybe only invite 5 people, 5 investors to look at it, and that's it. They get an offer, and then they go a little bit below the radar. And if you're not known, and your transaction security is not known, you're not picked. It's simple as that. Transaction security is key in the Nordics if you want to get in. So too many deals where you make an offer and then you jump in the last second, that is going to hurt your reputation. And it's such a small market that we all know each other and we all talk. Mm-hmm. So that is a key thing for you to get success, is find the 2 things: find the right partner, and then make sure that the first few deals you do, you show transaction security. Because if not, you're not invited back. I mean, we got a huge deal last year in the city center of Copenhagen. It was all over the world. We ended up buying it. We did not offer the highest price, but what we could offer was the transaction security. We were not even in top 3, I think. We still got it because of local presence and transaction security. So that's one of the key things in the Nordics, is if you're known in the market, your reputation is good, then you're much more likely to be invited into these smaller groups of investors looking at particular buildings or portfolios.
And that's quite interesting, Stephan, isn't it? Because in a way that's one of the challenges that you'll be facing, I suppose, is that, and also the difficulty of then trying to be able to break into new markets. What's your sort of strategy for that? Are you working with local partners, or are you relying on the information that you've built up from working for a while in Stockholm and in Sweden and in Finland? How does that work? How are you meeting that challenge?
Yeah, good question. Basically, we try to do everything. So everything you were mentioning. So of course we're trying to enlarge our own networking by just being present. As I completely agree with Rikke. Basically, the sort of Nordics markets, they are really relationship driven, and so once you have been there and you have been making deals and stuff, then you're known to the people and you get really a good hold of information and what's really going on. This is one thing. On the other hand, of course. But this is not, it's not big wisdom, it's not rocket science, it's, property business is a local business, is a regional business, and you always have to work with local stuff. The deals we're doing right now at the very moment is we were introduced by either there has been Germans, so the owners are German, so there is a German relationship, or we have on-site partnerships which we know from the past, from some other occasions, and they now introduce us to deals and to other persons. So yeah, we're trying to play the whole range of how you can get into the market. So local partnerships, we're talking to NIAM as well, we're talking to ARAM and to all the other market players to have off-market deals as well, directly. We're trying to find asset management, on-site stuff, as well as, I'd say the classic market players like brokers and KPMG and EY and all those people, lawyers as well. Yeah.
Okay, good. Let's drill down a little bit into some of the sectors that people here might be interested in potentially investing in. We've already seen from Tom's slide that there's growing interest in some of the areas, residential. What's your feeling, Andrew, in terms of the sort of international clients that you're looking at, particularly in terms of the sectors, whether that's office, whether it's retail, logistics, alternatives? What's your sense of the areas that they're looking in?
I think that it's not a lot different here in the UK. There's been a dramatic interest in industrial and logistics from the change of the way people shop and retail, and of course that will continue in the Nordics. And you have very good distribution platforms with groups like PostNord and the big Norwegian owned government owned one with Bing. And I think if you look at how Sweden, a lot of people are unaware of just the size of the country, and it's the same with Finland and the same with Denmark in terms of the number of very large companies that come out of these countries. So if you take Sweden, you have the largest telecommunications company in the world, which is Ericsson. You have the largest white goods maker in the world, Electrolux. You have one of the largest truck makers in the world, which is Scania. You have the largest marine engine maker in the world, which is Volvo Penta. You have Gripen fighter jets made there. You have the largest paper product maker in the world, SCA. The largest ball bearing maker in the world, SKF. And these are all these ginormous global companies that are coming out of, Sweden's a population of 9 million. And then in Denmark, you have, the largest shipping company in the world. You have, and so I think...
You got Lego, you got Danfoss, you got Grundfos. The thing is, some of these things is something that people don't realize every day.
And I think that...
The little digits,
but based off
that make things work.
A lot of people sort of say, but Scania make their trucks in China. But that's not true. A lot of this stuff is actually manufactured, or take Husqvarna, the largest maker of chainsaws, and all of that. Husqvarna is a town in Sweden. It's named after the town. So that logistic setup is tremendously powerful, and the port in Gothenburg is one of the few ports that has direct access into the US, where you don't have to actually have all of the security. It's high security, and it has all of the clearances for US distribution. So the actual logistics and distribution network in the Nordics is tremendous, and I think that will continue, and that has been seen with groups like NREP that have been able to sell very large portfolios, and there's been a tremendous interest in that sector, I would say. Office in the core markets has really been held by these pension fund-backed companies, and it's very difficult for other groups. GIC had an office building which they've just sold not just a year ago to in Stockholm, but otherwise the core office product is really held tightly by the local pension funds. And I think where the foreigners have been able to make their mark has been on these large portfolios of mixed-use office, industrial, and some retail, pan the Nordics, and those have been big plays, sort of billion euro type stuff, where you've seen Blackstone and Starwood and the likes doing those types of deals. But that's been real sort of 15% plus IRR type stuff, so that's what's been getting them out of bed. I think on the retail side, look, you've seen Grosvenor come in and set up shop and do very well. Retail is extremely popular. You've seen the new largest shopping centre in the Nordics going in Sweden, and look, the climate is very tough in that part of the world, so people want to be indoors and have indoor shopping centres. So it's a very popular sector as well. But yeah.
Rikke, in terms of the sectors, obviously PATRIZIA across different sectors. Resi was mentioned in Tom's, and obviously PATRIZIA well known for Resi. What's your feeling about Resi both in Denmark but also across the Nordics? Where are the opportunities for that? Is that something that you think has growing potential, bearing in mind the increased urbanisation that we were talking about before?
It's become, the little black dress, Resi, I think. Especially for investors who are looking for a stable cash flow. As long as you invest in the capital cities, the larger cities, they are all growing. The top 10 cities, except for Norway, but if not, then the top 10 cities in all the 4 countries are growing. They all have a lack of residential. Of apartments. I know that we are building a lot both in Helsinki and in Copenhagen and in Stockholm and some of the other larger cities. The thing is, it's not enough to meet the demand, because so many people are moving into the cities every year, and we already have a lack right now. There is no vacancy as such. It's more structural vacancy, if we have any vacancy with regards to residential. And I think it's going to continue to be the little black dress for a long time, depending on what type of investor you are. If you're an IRR investor, maybe not, because you asked before whether everything will continue. Everything will stop at one point. The question is when. Just see Brexit and what that did to the London market, for example. But and we also all know the crisis is going to go up and down. But one thing we do know is, no matter what crisis we have, people need to live somewhere. And I think that's sort of the sentiment from a lot of investors. If you have the right investment, right location, you can't go too wrong. Maybe the value on paper will go up or down depending, but the cash flow at least will remain as they see it. And I think that's the key point.
And so does that mean really people should be looking at development plays, and how possible is that within the big cities?
It's possible in all the big cities. The question is, do you know the people to get it? That's the question. I mean, we're doing a deal right now. The developer, huge developer in Denmark, came to us and only us because they knew the transaction security was good. We just bought another portfolio. Again, we were 2 people looking at it, 2 investment managers. We got it because of transaction security. So you can get all these things. The question is, I mean, if you pay for, depending on the countries and depending on the developers, I would be careful with the forward funding. But you can actually get turnkey development projects that will be delivered in 18 months for around the 4.2 mark in Denmark, in the Copenhagen city center in the harbor. That's what we're getting at the moment. I'm not sure about the Swedish market, Stockholm, because I've not looked into that for a while, but I think it's around the 4 mark as well, but with forward funding. The Finnish market is the same. And depending on, you need to, as you said, Pontus, legislation in Sweden is a little bit different with regards to rents, but in Finland you have the most capitalistic rental market you can imagine. You can actually say to them, hey, I want an increase of 2-3% every year, and you can just put it into your lease agreements, and that's it. They may leave, but somebody else will probably stand there and take over the rent. In Denmark, you can go with the NPI, CPI index, so you get that every year increase. So there's a lot of things where you sort of can model it and see it's not that bad. It's actually fairly good. We just did a financing in Denmark, and we were below 1%, 7-year fixed interest rate, all in. So you can imagine if we buy a 4.2, where are you going to see that spread? And that's one of the reasons why there are so many investors looking into Denmark at the moment. Also because we're pegged at the euro, so we can only, it's the most boring curve if you like a little bit of swing to it. But and that's the thing, for the fact. But you know, I've always been a fan. I've been a fan of Finland, even when people laughed at me 2 years ago. I still think Finland is really, really interesting, and I think it's safe to go in the Nordics to at least the top. In Sweden, it's to the top 10 cities when you talk about resi. In Denmark, to the top 5. In Finland, to the top 3, maybe 4 cities, and buy resi there, because resi is a totally different play than commercial, and that's one thing you need to understand. There's another demand for resi than we have for commercial properties.
And so that means really you're looking at, and that's probably one of the only ways to access as an international investor those smaller B cities, really, is through resi.
Well, yeah, but the problem is also, I mean, one of the things you said was there's a lack of the Asian buyers in the Nordics at the moment. That's also because deal sizes are not as big as you see them in Germany. I mean, we bought the famous Commerzbank Tower last year in Germany, 500+ million euro deal for one tower. I mean, you'll see that once every 5 years in the Nordics, because we don't have these volumes. So for you, it would probably be more single asset deals or portfolios, but you will never get up to the 5 million for one asset deal. I think we have 10, 15 buildings of that value in the Nordics, and they are all in the pension fund hands, except for a few on the barcode in Oslo.
And Pontus, in terms of financing, how available is that for development, and how available is it for these kind of secondary cities across the sectors, really?
Yeah, there is liquidity coming to construction loans. That's not a problem. I would be a bit cautious coming to building rights for residential, because that market it's been a Klondike of Stockholm for the last 5 years. And I just read in the paper the other week that now the average price is roughly 10,000 euro per square meter for a resi apartment in Stockholm. And then we're talking about a city that has roughly 1.5 million inhabitants. It's a fairly small city. And if you offer building rights, residential building rights on the Stockholm market, then you probably have somewhere between around 50, I guess, bidders bidding on that specific and that's not a sound development. This is something is about to go terribly wrong. You can also see that in the asking prices for these products when they're finished, and how much they leveraged the housing association. This is becoming a very, very unstable construction.
Doesn't it depend whether you buy to actually sell the individual apartments, or you buy to actually let?
Well, in Sweden you can actually have this owning apartment, but it's not that common, to be honest. So you have this housing association is the predominant way of owning your living if it's an apartment. I agree to you to a certain extent. It's slightly different if it's a rental apartment.
Yeah, and what I was speaking about was the rental, because that's the only interest for the investors. The privatization, which we call of the market, is either a value add play, where you buy really for cheap, at very good prices, and then you sell very expensively. But I agree with you. Going in to sell immediately to private people to own their own apartment is not an interesting case, because there the market is probably going to explode. But that's not just in Sweden. That's also in Oslo, in Copenhagen, and in Finland. The prices per square meter that people will pay for their own apartment is very high.
Okay, good.
I think Resi's a very difficult one to explain to foreign investors, actually, because I've sat in the office in Stockholm with some of the big funds who've wanted to come into the Nordics on Resi, but it's so difficult to explain to an American how the Nordic residential market works. And my view is that we've seen very little foreign activity in that sector on a large scale. We've been marketing the Turning Torso, which is the tallest building in the Nordics, just across from Denmark in Malmö, and that's, it's a very large lot size, but you can't carve up the individual apartments and sell them off. And for investors to get their returns, it makes it look to be, you're talking very, very low yields on residential, and then when you've got controlled rents and tenants that can complain if you try and lift the rent higher, and the only way you can lift the rent higher is if you do a kitchen fit out or something like that. It's very, very difficult to understand for the foreigners, and I think my view would be that rents on residential are probably not going to grow that. I think with the amount of stock that's coming through, it's probably pretty flat, whereas I think you'll see rental growth in most of the commercial sectors. So Resi has been, as you say, the darling of the Nordics and the little black dress. I'm not sure how long that will continue for.
Okay, good. Stephan, I just wanted to pick up one thing with you, which is last week in the Germany session that we did, there was a view that it was getting much more competitive because of the sectors beginning to compete with one another for inner city or urban space. So you've got logistics competing with Resi, competing with hotels, competing with office, competing with retail and mixed use. What's your view in terms of the competitiveness between the sectors within those cities?
Okay, yeah, it's a big question actually. So, but if we look into at least the capitals of all those countries we would consider as Nordics, then it's very centralized countries. So you have like, I don't know, Finland is like 4 million inhabitants, I guess, and there is like 1 point something a million living in Helsinki metropolitan area. So there's like 25% population is in that area, and 20% in Sweden and things like that. So this is a quite high density, and they have really big growing factors. So in terms of population, so urbanity and a competition in those environments is definitely given. I absolutely agree on that. So this is a big issue. We have seen some conversions in Stockholm in the past already. I'm not sure. I'm not that familiar how it is today, but what we can see is on as a residential or logistics, retail, office is. Since there is a lack of product basically for investors, that's definitely a matter of fact from my perspective. Then you have like and there is a lack of product for users as well. So for tenants, for people looking for flats and stuff. So this is mainly the same situation we all find investors and the users living there or trying to get a retail unit or something like this is, and the only way it goes at the very moment, the compensation goes into pricing, and so you have very high competition between type of usage, I guess, and if there is. Just assume there is a something, a plot of land somewhere in suburbans of Stockholm. Of course, there is this competition of what are you going to do with that, and there might be also discussions with the municipality, what they have in mind, what's going to be there. So I would definitely say there is a competition between the different asset classes. Absolutely.
Okay, good. I just wanted to check, has anybody got any questions, any thoughts that they want to contribute?
If we look forward, let's say 3 to 5 years, what would you see being the biggest threat in the Nordic property markets? I mean, you could argue, if you want to, that stock markets are relatively elevated. Private equity or venture capital opportunities are extremely expensive, depending on if you are whatever you are. Fixed income or government bonds are down in zero in all of these countries, and key rates are deep in the minus. So for and the financial markets are flooded with cheap money, and central banks are printing like there were no tomorrow. So from my perspective, it's gonna be, from my perspective, then the key rates from central banks maybe have seen their party days. Let's put it like that. If you look 3 to 5 years ahead, from your perspective, what would be the biggest threat going forward?
Interest rates. The market's been awash with, there's been a real flight to real estate. It's been the flavour of the month. So there's been, a movement away from corporate bonds. And I mean, if you look at, say, the big AP pension funds, on average, they return, each of those is close to 25 billion euro each, and there's five of them, and on average they're returning sort of less than 3%, and they're 50% into equities, 30% into fixed income, 20% into alternatives. But each of them have been lifting that exposure to alternatives to have more of a piece of real estate and perhaps infrastructure funds as well. And I think if you look at how one good thing I would say is that you don't see, like in this market in the UK, there's a lot of quite highly levered real estate transactions, and the mezz players are very active here. And perhaps Pontus can talk more about this, but my experience is that the Swedish banks have learnt from their mistakes in the past crisis, and whenever we've tried to put an extra layer of mezz on the senior, etc., the Swedish banks just don't like it, and they don't want to have that there. So that's probably a good thing from a safety perspective in the Nordics. But still, I mean, the interest rates have been so low for so long, and what happens when that shifts up? There'll be some pain and there'll be some opportunities. But that's just
No, I fully agree with you, and typically the Nordic real estate market is not that, the leverage is actually quite reasonable, and that's always something we learned post 2008, I would say. You seldom see mezz pieces, and you typically see an average LTV of between 50 and 60% tops, and the few mezz funds have been, they're typically focusing on some more residential speculative builds, I would say. But I concur, I think the interest rate is one of the biggest threats. We have some local discussions in Sweden right now regarding a new tax legislation that might come through, prohibiting as obviously you all know, it's tax-free to sell shares in fully owned daughter companies. This has been very, very frequently used in trading real estate, not to actually sell these shares, and it's been very beneficial. And this is something that could dampen the transaction volume a bit if it comes through in the way it's presented right now, but that's yet to be seen. But we can all conclude that there will be a slightly higher tax pressure on real estate investments in Sweden, at least, going forward. But again, it's election year next year, so we don't really know what the outcome of this will be.
Okay, good. Yes, go.
I just wanted to get your views on the hospitality market and how hotels are seen in the Nordics now, whether there's a good appetite from an investment perspective, and whether or not that's becoming more and more of a mainstream or a core asset class, and not just looking at resi and offices.
I think absolutely yes. It's PwC does this big sort of annual survey, and there was some interesting research there on what investors think are the sectors that they should be focusing on, and a lot of that is shifting away from the traditional sectors that we know and moving into healthcare and public properties and of course hotels. We've been marketing probably about an 800 million euro hotel portfolio, and what we've seen in that is it was a portfolio that was owned by a Finnish private equity group, and the capital that was behind that was a lot of Finnish pension funds. But the thing is that the returns on that hotel portfolio for those investors have been so strong that when the fund came to the end, most of them were wanting to, almost 95% wanted to stay on. So it's turned into more of, instead of a trade sale, it's turned into more of an attracting new equity into that club. And I think that's been interesting because that capital has been from all over the world. So definitely hotels have been a hot sector.
Absolutely, and we have actually one specialized fund that opened up a couple of years ago just focusing on hotels. This is pension funds directly investing in hotels. We saw Balder picked up a big portfolio, and Erik is very fond of hotels. Pandox, they made an IPO here just a couple of years ago, and it's specialized on hotels. So yes, absolutely.
But just, we were talking to some hotel chains in the past, actually, when it comes to, we were discussing a conversion in Stockholm a couple of years ago, and I think you can compare investor situation to the hotel chain situation. Everybody wants to get into a hotel in Stockholm, and but there is just, and then we are back at competition between asset classes. So. So definitely, we would love to add a hotel as a class to our portfolios as well. But still, there is a lack of product basically for hotels itself and for investors.
I would want to say yes in certain cities, no in others. There is a lot of brands wanting to come in. There's definitely an opportunity to set up alongside one or two different brands and then go in and buy, and these brands will also do leases, we know, because we're discussing with them, but I would be very careful of where and how and when, in which cities I would go in, because some cities actually have an oversupply. They just have a peak a few weeks a year where they don't, and then the rest they have an oversupply. So I would investigate a little bit more into the different cities. But when it comes to hospitality in general, there is definitely a healthcare perspective that we've not looked into enough, I would say, in the Nordics. But it also has to do with, in some of the countries, healthcare has not really been professionalized. And that's one thing, but the other thing is also due to our taxes, a lot of these things are given to us. But what we do see is a lot of OPP in new hospitals and other things. But healthcare, senior homes, and so forth should actually be the next asset class. I think people are starting to jump to. Because the population in the Nordics is also getting older, but we don't have. But then the operation side of it is a tricky thing in some of the countries.
Where would you invest and why? You can include Iceland if you wish. Let's start with you, Stephan.
I would go for the question, where would you like to invest? I think
Okay.
this is the most one which is moving us. So basically, I think we would like to do office in all the capitals in A locations. This is like a wishful thinking, and on the other hand, I would do residential in Finland and Denmark as well. So we've been looking into it, and out of town retail in close to Oslo and Stockholm and Copenhagen.
Okay, good. Andrew?
I take a close look at the listed sector in Sweden because it's been trading at a 15% premium for quite some time on average, and that's now taken a dip, and it's in several cases below book value on some of these companies. And if you're wanting to enter the market, there's no better way than taking over an existing company and having a structure that you can build off from there. So I think there'll be potentially some public to private plays, and I think that can be a very good way of entering the market and having mass from start and then building that. So we'll be looking at a few of those, I think. And because of that, read into it what you will, but does that mean that generally if the listed market starts trading at a discount to book, then I guess there's a view that some of these companies have got their assets valued too highly, and I think there'll be opportunities that come out of that. And we're already seeing that with some of the listed companies looking to offload some portfolios. So I think that will be really interesting in the coming months.
Okay, great.
I actually concur with Andrew here, and I would you probably see consolidation play going forward as well. We've already seen that to some extent, but I think that could be extremely interesting. We can also see some residential developments that are actually struggling a bit, so if you're a bit nasty, you could perhaps pick up some good pieces there.
Are you willing to be nasty in order to pick up those residential ones? What's your
No,
view?
because we need to do deals again afterwards. It's actually annoying Andrew came first. But anyway, so I'm going to say something else so than the public to private. Other than that answer, then if I can't do that because Andrew is doing it, he's picking up the cherries there, I would probably take a few $100 million and put it into the Helsinki metropolitan area in a more value add to opportunistic play. Though it's very asset management intensive, that's what I would do. Because there's a lot to be done there, and you still see some interesting yield gaps compared to the rest. Then I would also look at a pan-Nordic selected cities, what we would call alternative housing, so more student housing, smaller flats, because that's where you really see an increase in rent at the moment. The rent per square meter is fairly high compared to if you have these 90 square meter apartments. That's sort of where you can go at the moment in the Nordics. But that's probably what I would do. Until next time.
Okay, great, very good. But if you could just join me in thanking our speakers, that would be great.